All right, what's going on, everybody? Chris Prinks with Texas West Capital coming at y'all live here on Friday, right before the big snow ice kind of thing going through Snowmageddon, Iceageddon, whatever you want to call it, um, through a good swath of the southern part of the country. Yeah, it's going to have effects. They're not going to like them, but anyway, I'm coming at you live here from just north of Houston, Texas. Hopefully, y'all are doing all well, are doing all right, doing well. I'm going to do some chart requests today, and we'll see how many we can get through with all that. As always, the goal here is to help you understand markets, help you understand trading, help you understand yourself, hopefully, because the truth is, most of y'all, you're not ready to be traders. And I mean, I say that, and then instantly, of course, you get upset, you get offended. But, I've never been here to just tell you what you want to hear, right? I always tell you what I believe that you need to hear. And what you need to hear is being a trader is not something that you do overnight. I see Fibaswani's in the audience here. Between Fibaswani and myself, it's almost 60 years market experience, guys. And so, what happens is you get these big accounts out there on social media that are telling you, hey, you can be rich overnight. Hey, you need to use leverage. Hey, you need all this silliness. And unfortunately, that's exactly why you're losing money. It sounds kind of funny, right? You come in here and everybody's telling you this is what you need to do, and you can do it, and you can turn, $100 into $1,000 overnight into $1 million, at the end of the month. But you can't. Sometimes people get lucky and they get a trade and they happen to just get themselves into something before it blasts off. But it's luck, right? How do we know that? Because if it's something that they can legit do, right, that isn't luck, they would be able to do it consistently, like time and time and time and time and time again. But they don't. Usually you get them once or twice, maybe. But that also, they don't show you how many times they've lost along the way as well. And so you end up believing, man, trading is this thing that because I can just sign up and do it, especially with crypto, right? I mean, at least if you're trading the stock market, here in the US and whatnot, you've got to be 18 years old, blah, blah, blah. You got to fill out the paperwork. But if you want to trade, crypto, jump out there at 12 years old and you think, oh my God, I can do this, right? But most people can't and most people won't. And it's not that they can't because they aren't able to. It's because of what I talked about just a minute ago. It's their mindset, what they believe. Trading is not a get-rich-quick thing, but it is something that you can do that can demonstrably change your life in a good way if you do it properly. And that's what I'm here to talk to you about every week, guys, is how to do it properly. Most people are going to get you and they're going to be, hey, listen, use my magical little system and you'll be rich instantly. There's no way you can lose, right? And they don't care that you don't make money. They don't care that their churn is way up there, right? People continue to come in and leave and come in and leave because they're telling you exactly what you think you want to hear, and that feeds it, and you're willing to go and pay for that until you get in there and you find out, oh, it isn't like that, right? So what we do at TWC and what I try to do in social media is I try to help you guys understand where your thinking is wrong, where it's going to hurt you, how your thinking and how other people's thinking affect market movement, right? As well as giving you structure. That's the thing, right? It's all about structure. It's all about, I used to talk about this a lot, but you have to have discipline, consistency, focus, and effort. You have to have those things. You can't think that you're going to get in here and try it for a week or two and then you go, oh, well, it's not working, so I have to go do something else. Or maybe I have to do it a different way. Or, you're constantly jumping from system to system to system rather than ever learning the system that you have, right? The system that you have in front of you. So a lot of your issue that you have with trading, I mean, it can be broken down into two things. One is you don't understand markets, why and how they actually move. Why and how does liquidity form and where does it form and how can you exploit that, and the use of proper risk management. These things you don't know, right? But the other thing that you don't know is that it's going to take time, just like anything else you learn, right? You're not going to get it figured out the first day, probably not the first month. It's going to take you a while. A great example here. There's somebody in the audience, Praga 3777 is Jonathan. He's with us, right? Jonathan had been trading for about 3 years before he joined us. And 6 months after being with us, his accounts were finally back into the green. And just today, he posted he got another 100 points on gold this week and 100 points last week on gold. And he trades the micro E minis for the MNQ. He trades the ES, right? Or MES, actually, the micro E minis, right? That's what you should be trading. And in crypto, and he does all this consistently, right? Does that mean he gets every trade? No. But man, this guy gets in there in our live trading chat. He posts every day. He's showing charts of where his trades are and how he's doing. And he's honest about it. He says, listen, I screwed up here. I did this, didn't do that, whatever, right? But we have other people as well, and they're kind of doing that same thing. And it just comes back to this thing of where you need to focus. Okay, so number one, what you most likely are doing right now is jumping from system to system to system, right? Every time something doesn't work pretty quickly or consistently right away, you kind of just move on, right? We've all done that. That's the way we do this, okay? But that isn't the way that you're going to be able to make it as a trader. And that's what I'm here to tell you, right? Because I believe every one of y'all listening in has the potential to be a successful, consistently successful trader. Most of you will not listen to what I'm saying here and take it seriously. You'll argue with it, you'll fight with it, and you'll never get beyond where you're at. Being a consistently profitable trader means you have to have not only discipline, but you have to have humility. You have to say, listen, I don't like, or I don't know what's going on. I don't know as much as I pretend I'm knowing, right? But even Fibbo and myself, we both constantly learn, right? We've been doing this. I've been doing just over 30 years. He's been doing just under 30 years. Both of us are still every day looking to see what more we can learn. And you go, well, why would you do that? You guys are already, successfully trading and whatnot. You know what? Why would you do that? Well, because the moment you stop learning anything in life is the moment you start falling backward. The moment it starts taking off without you. You got to keep up with it. You cannot sit here and go, oh, I know absolutely everything there is to know about a certain subject. You don't. I promise you, you don't. You might at best know enough to keep yourself dangerous, but not to know it all, right? And in markets regimes changes, change constantly. Cycles change. Things that are going on. I mean, you can look right now, right? We got silver, spot silver hit $100 an ounce. Gold is just shy of $5,000 an ounce, right? Copper was up there huge, right? Palladium was up there huge, right? Nat gas just the last 2 or 3 days had the largest percentage movement it's ever had in its history. It was huge. It was something like 60 or 70% in like 2 days, 2 or 3 days, something like that. So you've got all this going on. Regimes are changing. Things are doing different. And then you've got people online telling you, listen, well, every time it's done this thing, it's done this, or the 3 times this is big in Bitcoin, right? You have to be really careful out there because Bitcoin's got a very short life, 15 years. It's a few cycles. That's just a few data points. And somebody will get up there and go, hey, last time it did this, this is what happened. Saying, oh, it should, basically telling you the odds are it's going to happen again. No, it's not. Those aren't odds, guys. Statistically, it's a non-event. If something's happened 3 times before in Bitcoin's history, should it repeat again? Not necessarily. It's 3 times. Statistically irrelevant. But you get caught up in that because it tells you what you want to hear, whether it's price go down or price go up. And again, Bitcoin, the Bitcoin community is notorious for this. You want to be careful out there. Fibble and I have learned after 30 years that guess what? There are no guarantees in trading other than you're going to lose money from time to time, no matter how long you've been doing this. You'll never not lose money. And the newer you are, the more money you'll lose and the more often you'll lose it. That's the only guarantee in trading. Everything else? No. So when you look at those other things and you go, oh my God, it did this the last 2 times, so it's going to do it again, or the odds are high it's going to do it again. No, the odds are not high. The odds are insignificant. This is statistically insignificant at this point because it's only been 2 times, 2 out of 3 times. Then it's only happened, it's only happened 3 times and 2 times it's done that, right? It's silly. But because Fibble and I have learned this about guarantees and whatnot in trading, we will never guarantee you price is going to go up or it's going to go down. We help you understand systems. We help you understand structure. So that way hey, listen, I think it may do this, but if it does this, but we need to kind of go through this level to say that where it's most likely or more likely going to happen than not. But if it goes the other way through this other level, that means that is not what's happening. And instead, we're going to this other target. Now, a lot of retail traders get confused and they're like, oh, look, you can't tell us where it's going to go. Well, and that's exactly your problem. You think somebody can because somebody guessed right once or twice. I've guessed right a lot. There was nobody in this cycle that's called more bottoms across stocks, various stocks and crypto than I did publicly out there. I have yet to find anybody that's called more. Does that mean I definitely know where it's going? No. But it means we look for a set of things that happen that make it more likely than not that we're going to be correct. And then we use proper risk management so that when we're wrong, because we're going to be wrong at times, it doesn't kill us. Okay, I'm about to get into these charts, guys. But listen, let me tell you, you have 2 jobs as a trader. First one, use proper risk management every single time you trade. That's easier said than done, I'm going to tell you right now. The second one is to lock in profits consistently. I didn't say it's to get all the move. I didn't say it was get at the lowest price and get out at the highest price. I didn't say it was to get anything. I said it was just to lock in profits consistently. Because if you can do that and use proper risk management, so that way when you are wrong, because you will be wrong at times, it doesn't wipe you out, right? So if you can do those 2 things, then guess what? Time and compounding takes care of the rest of it. Time and compounding is real. You think your account's going to grow because of the trade you're on right now, the single trade you're on. Your account grows because of how many times you can lock in profits consistently and how you can protect yourself when you're wrong. That's why your account grows, not because of today's trade. So what does that mean? That means as a trader, you need to stop focusing on the single trade you're on and start focusing on the system that you're utilizing. The changes you make have to do with the system, not with that single trade. And if you can do that, which you can, if you choose to do that, you're going to have a heck of a lot more opportunity to be successful. So these are things we constantly talk about. These are things we remind you of. These are things we push over at TWC. This is why we say the things we do out in social media like we do. The problem is, again, most of y'all listening in are not going to listen. And we understand that, right? Fibble and I understand that. It is what it is. You're not, most people are not, at the time the message first comes out, most people are not ready to hear the message, whatever it is. In this case, we're talking about trading. So we just keep repeating the message, hoping that it catches you when you're ready to listen. Does that make sense? All right, let's go ahead and jump into some charts here. Let me see here. Oh, by the way, final days here. You can jump over to members.texaswestcapital.com and sign up for the monthly liquidity cartography group, and you can get 55% off the monthly price, guys. So this is about to be gone. 55 off is the code. Use it. Members.texaswestcapital.com. That's what you need to do. All right. So let me see here. Let's pull up some charts here, and then we can start looking at things. We're going to talk about Bitcoin here real quick, and then we'll go on to the things that you guys, the other charts you guys are interested in. Okay. Oh, here's what Fibbo said. Look at this. 30 years in, I still study because markets don't reward experience. They reward alignment. The moment you stop learning is the moment structure passes you by. That's right. That's right. So anyway, this is the chart that I pulled out back when we were looking to start pulling back here. And I said, I'm looking at two possibilities right now more than anything else. One is we stop here and we print in Wyckoff what's called a last point of support. There is capitulative volume there. This is the weekly time frame, large lower wick, huge amount of volume. Again, this entire cycle, the only time there's been more volume than that drop right there was this candle right here, this upward candle right here for the week of November 11th, 2024. And it's in that same area. Notice, it's in that same area that we got kind of the stop here, right? So again, either we get the last point of support here, or we get likely a spring. A spring, if you don't know, this is the range here. I've got up from the buying climax to what would be the automatic reaction selling climax down here. So a spring would be a candle that drops below that and then rallies back up into it. So it kind of wicks below it. The yearly S1 pivot sits here at 65,863. So if we were to break down, the odds are we get a candle that would break down here, maybe wick down into this area, and then close back up here. And if you see that, you definitely want to consider being long because there's a good chance that's done and we head up. Now, is that going to happen? I don't know. I can't tell you if it's going to happen or not. Part of learning Wyckoff is understanding that it's about watching what is going on with price and understanding it as it plays out. It's not about saying that price is definitely going to do this or this. It's about understanding what could happen and why. So what I talk about here with Bitcoin, which is different than most people, is here's what we have. These are as far as a cycle goes, these are the two things I'm interested in right now. If we get a monthly candle or a weekly candle, impulsive breakout and close above this $96,067 kind of area, depending on what chart you're looking at on the weekly, this is the yearly pivot. If we can get a weekly or a monthly candle that breaks out impulsively and closes above that, odds are significant that the low is in here. If we can't and we lose this low here, there's a couple little range areas we can look at, but ultimately we would look at the possibility that we get a wick here, excuse me, below this, what is this, 74, 434 low here, that we get a candle, a weekly candle that wicks down below that and finds support, maybe right here around the S1 pivot, a little bit above it, maybe a little bit below it, and then rallies back up into this range above that 74,000 area. So, basically something like a wick like this here. See how you have this wick here from back here in the week of August 5th, 2024? We could see something like that here on the weekly, potentially. Okay? So what does that mean, Chris? What are we going to do? Well, we're going to do whatever price is going to do, but now we're understanding where the important levels and the important things we're looking at are, right? That's really what we're looking at. Now, could I be wrong on both? Yes, I could be wrong on both. And in that case, price would continue down lower. Okay. But until that happens, I'm not ignoring this possibility here. Now, I hear a lot of people saying, oh, we're going to wait for 107, something like that, right? They're thinking up here and get rejected and fall back down. Could it happen? Yes, it could. But the reality of it is, again, if you get that impulsive breakout, what do I mean by impulsive breakout and close? I mean like a biggish kind of candle spread, the body of the candle, right? Pushing up through that and a close above it. And so it's larger than these candle bodies here. And a volume spike that's generally larger than these kind of volumes right here around it prior to it. Because that shows what? That shows conviction, right? A large candle body itself doesn't really tell you much, right? You want to understand with that, are you getting participation? Is the market joining in with you? And that's where you look for that volume to come with it. So if you have that thing above the pivot, the odds are significant that the low is going to be in here and that this pivot area is going to hold this support. Now, again, the other thing I've talked about is this fact that we've got a call wall sitting around 97, 100,000. If we get price acceptance above that level, that forces dealers to buy. It's a spreadsheet. It's a mathematics. It's not emotion. They're like, oh my God, FOMOing in. No, they're hedging their positions for all the calls that they sold here, right? And so if they bump up through that, they're going to have to buy more Bitcoin, right? And now it's not significant enough that you're going to get like a $20,000 run. I don't think you're going to get something like that. But I could definitely see, a momentum pushing through here that kind of carries it potentially to 104, 110,000. And again, once you're doing that, the way that weekly candle might end up looking, if you can have that close above, again, this pivot here, and you get that volume in with that expected volume with such a move, right? Because it would be basically a localized gamma squeeze. Not a short squeeze, a gamma squeeze. Short squeeze is basically a retail thing, right? It's when people FOMO in. Versus a gamma squeeze, which again, as I mentioned, is just math, right? In order for dealers to remain hedged on the calls that they sold, right? Because they don't want to lose money selling those calls. So they have to buy spot, right? So anyway, that's what we're looking at with Bitcoin. So we'll see what happens. We had a nice kind of bullish or hidden bullish divergence here. This area. So you're getting the higher lows, lower lows here on the weekly. We did cross bullishly here, but now we're kind of curled back. So we need to see if we can pull this back up. The weekly doesn't close for another couple of days here with Bitcoin, right? So yeah, really, that's all we're really looking for. At the end of the day, you don't have to know. See, here's the thing. Retail traders come in when they first start and they think, oh my God, I have to know where the target's going to be. Okay. People used to be like, you come in and you think, oh my God, I have to know, I have to be right. No, you don't have to be right on where it's going to go ultimately. All you have to do, because remember, I told you, there's two things you need to do as a trader. One, use proper risk management. Two, lock in profits consistently. So that means all you have to do is be correct directionally. Get into a trade and then exit with profit before the direction changes. You see what I'm saying? It's not the things that you think when you first come into trading that seem to make sense. I remember I was there 30 years ago, 31 years ago now. I remember. But once if you're able to really learn what's going on, these things I talk about, then you kind of look back and go, man, yeah, boy, I was wrong. It's crazy because it's so much different than what you think it is. Markets, trading, all that kind of stuff. Which means it also ends up being a lot easier. I didn't say easy. Maybe I should say not as difficult, right? Because trading is simple. It's not easy, right? It's not easy because you got to constantly deal with your own emotions and your own psychology that's going on. That's what makes it difficult. But it's simple because price just moves through liquidity. It seeks out liquidity. There's no giant algorithm that's controlling all the markets. Stop listening to the nonsense. Markets are still driven by human beings. Oh, but so much of the market is auto and bots and whatever. Yeah, but they're designed around what's expected, and what's expected is what human beings tend to do. Okay? These are the things, these are the realities, guys. You're going to have your kid traders out there that are going to try and tell you all the nonsense retail stuff. That sounds right. But it's not going to get you consistently profitable. Okay? Colton, what'd you say there? Take it from someone who used to trade for adrenaline. Boring, consistent trading is way more profitable. Figuring out how to trade like that is way easier with professional teaching. Yeah, exactly, right? I was blown away. I mean, kind of, not really, but kind of. You know, when I did that research, and I found that you've got a 1 to 5% chance of learning to become a successful, consistently profitable trader on your own. I've been real honest about me. I never learned it on my own. I've had multiple mentors along the way. And so there's nothing wrong with that. Everybody thinks they have to be able to do it on their own. That's nonsense. Why? Even if you could do it on your own, if there was a way that you could do it, let's say on your own, it would take you 5 years. If there's a way you could learn to do it in 6 months or 12 months or 2 years on your, with some kind of mentor, wouldn't you rather do that? That gives you 3 or more years of compounding returns, puts you exponentially further ahead. Why would you choose? Try to learn. But again, this is, like I said, it's a lot of what we think when we first come into markets and trading, and a lot of what's sold back to you by a lot of these gurus and large accounts out there that don't really have a lot of experience trading, but they're good at marketing because they don't care. They want to tell you what you want to hear, because as long as they tell you what you want to hear, you're going to keep coming back, right? But at the end of the day, it does take you doing the work, putting in the work that is required. All right. Let me see here. Let me kind of catch up with you here. The yearly pivot is the right area for sure. Yeah, I mean, it's absolute perfect place to be. If we can get, reclaim that impulsively, get the close above it. There's no guarantee it won't come back down, but the odds are much more in your favor that the low is in here. So again, can it get up to 107 and then break down? Sure, it could, but the odds are against that happening. That doesn't mean it can't happen, because just because when you say the odds are against it or for it, doesn't mean it can or can't happen. It just means more or less likely. It doesn't mean not likely, right? It doesn't mean not at all, guaranteed, or made it guaranteed, right? So there we go. So let me jump up here. What do we got as far as chart requests go? Can I look at hype? Firefighter Marion. Well, if you are a firefighter, man, I can't even talk. If you are a firefighter, my man, I can't even say it. I'm trying, man. I'm trying so hard. Man, what a job. What a job. Stay safe out there. That's crazy. Let me do this. Let me see if I've got something here from before. I haven't looked at it in a bit. I do have something here. Let's see where we're at with this. All right. So hype, the way I had it here was looking as a 1 in prop, maybe a ABC for a 2 down here, but it looks like we swept that low. So let's update this count now. Whoops. Let's update this. Let's see where we're at here. All right. So ABC and then WXY potentially here. So another 3-wave move, which is what we'd be looking for. Here's what I like. I like that we're trying to find support above that monthly S1 pivot here. We've got, we have it there? Yes. We've got bullish divergence at that low right here. Right there. We got a 78.6 pullback almost off the swing high. Let's see here. And then we'll look at, that's pretty clear 3. So we'll just say WXY here, potentially done at that swing low. All right, I'm going to go ahead and remove this. So we don't need this anymore. And now, big picture says we've got to break out. This big 1-2 count says we need to break out here above this wave X up here at $50.16.5. And if we do that from where we're at, that means that adds confidence to the count. And that'll give us a minimum expected wave 3 target at 101.15 or so. Minimum expected wave 5 at 120. Let me see here. Now locally, I like it looks like we've got a spring here. Look at the volume. Basically, it kind of stayed up here, stayed up here, stayed up here, and then just kind of dropped off the rest of the way. The market, when the market had the chance to join in and sell off down here, it didn't do it. Volume participation dropped off. I like seeing that. It doesn't guarantee it won't go down further, but it's definitely something worth watching because your market participation is not showing up there. So, I mean, like here on the daily, you can look for a daily candle, impulsive breakout and close above this descending resistance, probably up here around $24 or so. That would be your first clue that that low may be in. But you need a bigger move through this last kind of swing, coming off this top here, the last lower high up here, which is right around this $28 area. Popping above that makes it seem much more likely that low's probably in. Again, breaking out above 50.165 is going to add confidence to the overall count, have you looking up toward at least 120. Now, those prices can go higher. These are minimum expected targets. But you notice we came down in here, right into this high volume node, low volume node sitting right below it. If we go over here, I can do it from here. Right there. Well, maybe not. Okay, let's try this again. If we pull kind of this low area here and pull it across, what do you notice? This is support here. This is resistance. It's support. So this is a significant area. The only place where there's been more volume on this chart, slightly more volume down here around 15, 16 bucks, and then up here above, 24 and some change here. So if we're looking at our volume here at the price levels, closing above this kind of $25 area means that this is going to start working as support rather than resistance. And again, the market has been most interested right here at this price point, right there around 24,671. Now, the one thing you have to understand is just because the market's interested there does not make it bearish or bullish. It just means when price hits that area, the market is more involved. You're getting more buying and selling. In this case, the most buying and selling at any price level on this chart. So if you're under it, as you push up into it, it becomes resistance. But if you can break out above it, it becomes support. So I'm not hating hype here at all. But we definitely want to see some follow through here, right? If it does break down further, we'll look for it to kind of sweep this 1967 area. And we'll see if we can get a rally up from there. But really what you're looking for, first thing is impulsive breakout and close above that descending resistance, then above this $28 area. And then your next real big breakout is going to be above 50.165 to get you toward that potential 120 target area there. Let me see here. Kind of catch up with y'all here in the chart, in the chats. Charts in the chats. And let me see here. What'd you say there, Dell? That's why I'm with TWC. I was losing money listening to the stuff on X, etc. To earn professional money takes professional skills and mentorship. My man. We appreciate having you there, of course. mRNA, man. Yeah. mRNA is crazy. So somebody was just asking me about this in TWC. What, today, yesterday, something like that? Let me see if I can. I might have the chart already up here on a different tab, a different browser. Give me a moment. Let me see. Where are we looking? Oh, yes, I do have it. Here we go. See if I can pull it over here for you guys. Once I get all these windows. Are you guys like me? Do you have lots of windows and tabs open all the time? I do. Looky at that, guys. Look at how pretty that move is here. Not that I'm overexcited about Moderna or J&J because or Pfizer because the whole COVID thing. But man, look at this. So you had your range, you had this accumulation, you had this beautiful spring. And if you're with me, you knew that you should take this trade right here. So the next day when it opened, or the next week, well, it's the next day, whatever when it opened, but the next week here, you could go when the week open here. You should have been long with the stop loss just below the swing low there. Right? But look at that beautiful move up all the way through. Now we're up here. We've got a 1, 2, 3. The 3 is up there around 200%. So I think wave 3 is probably done. You can see we hit this sideways right here. We had this opposite candle. And then, of course, if we look further aside here, you just kind of look at this area. And all of a sudden it starts making sense about why it stopped in that area, right? Come on. Try this one more time. You see this right here? You see your resistance and your support, your resistance. Duh, of course it's going to stop there. Low volume node. So for me, on the weekly here, I'm looking at this as, like I said, wave 3 probably being done since we've already overextended the 200%. I love that the 38.2 pullback, which would be the wave 4 initial target at 45.39 or so, is right there around the R1 pivot. I love that because it's where we're expected to pull back, and it just so happens to be a support area right there, right? And if we can then get a reversal off that 45 kind of dollar area, would have me looking up here at least at 66. And I could see it overextending a bit, maybe trying to push up into this descending resistance, but right around that area I think is a good target. So what you get is 5 waves up toward this resistance, 3-wave pullback, and then your breakout is going to be your wave 3. When you get your breakout through these definitive areas of resistance or support, usually it's your 3rd wave. So very strong. You know, this has been resistance since 21, since almost Q3 of 21, or I guess Q3 of 21. So again, the idea is you would rally up toward that, pull back, and then get the breakout. On this is 3 waves back here. So breaking out above 170.47 should have you looking to new all-time highs. So this would get you as a 1 and a 2 and have you looking for a breakout higher there. Definitely not hating Moderna though. I mean, not a fan of the company, but the chart, right? Let me see here. So congrats on that buy there, Mr. Bennett. Let's see here. FISV stock. I don't think I have that one. What's today, the 23rd? Let me see here. FISV. Oops. All right. Woo, look at that droppy drop. Look at how oversold we got on the weekly here. Right off, what I like about this is I like this pullback. May have found support. It looks like it just found support right here at this previous kind of resistance. Yeah, there was a wick up, but this support resistance area right here is where we just got pulled back into. So I like that. Let me see here. Let me zoom out to the monthly, see a better look at this whole thing. God, look at that chart, guys. Look at this. Is that, oh my gosh, no, that wasn't. Wait, is it? Yep. This was Black Friday in 1987. So if you had bought FISV after that big drop for Black Friday, then look at that. You would never have had to have sold it. And up there at the top so far, you'd have been up 87,000, 83,000%. Right now, you're only up 23,600% right now over that few decades there, 3 decades. That's insane though. That's absolutely beautiful. I love that. But yeah, let's kind of zoom in a little bit here. Weekly, 3-day. Let me see here. We're trying to hold support at the monthly pivot. So this, at the moment, I'm going to zoom in a little bit more, but this looks like 1, 2, 3, 4, 5, and then 3 down for A, 3 up for B, and then maybe 5 down for C as an expanded flat here. So potentially wave 1 completed here, and then stupid thing does this. And then we have maybe wave 2 just ended there. Let's come into the daily looks definitely better here. 1, 2, 3, 4, 5, ABC, ABC, 1, 2, 3. Yeah, that looks like a flat. If I'm looking at this, I'm thinking let me kind of continue putting all this in here real quick. 1, 2, 3, 4. Minimally this here. 5 waves up would give you 83.80. And again, ABC down for A, ABC up for B. 1, 2, 3, 4, 5. Finish your flat. Mr. Bennett, I like your chart here, buddy. Now as far as Elliott wave goes, to confirm this, you have to break out above the wave B extreme there. So you got to break out above 70.41 to add confidence to this. That looks pretty clean though. You could probably get in right there. Yeah, but you would just put your stop loss. You got to use proper risk management, guys. There's no YOLO, leverage, all the stupid things that, traders tend to want to do. But this chart right here, I mean, this gets you right below the swing low there, 5 waves up. That'll get you just over 5R on that, which means when it hits that target up there, if it hits that target, you'll be making $5 and basically 22 cents for every dollar you risked. So you can turn, $100 of risk into $500 in profit, $1,000 of risk into potentially $5,000 in profit. But you have to use proper risk management, right? But the bigger story here, so here's this big old gap. And so if we don't get any overextension here, push up, which we could get, but if we don't, this just begins the move, right? And so now you start looking at potentially we'll get this up there, which then has us looking for this right around the 50% pullback, which gets us right above this previous kind of resistance here. Because at the end of the day, you could just draw this. Let me kind of take this. Let me use that line there. You can just draw that, right? At the end of the day. But, again, we're looking at Wyckoff and Elliott wave here. This would give us a 3 up here, a larger 3 up at around minimally 110.85, which is 5 minimally up here around 120. But I think this would overextend along the way here to fill in this gap. It's going to end up here probably closer to 126. And if you're doing that, guy, I mean, the odds are significant that the low is in here. So you've got potentially what could turn out to be a hell of a longer-term trade here. By the way, notice that wave 5 target is just prior to the yearly pivot. So you get up there, and then you pull back 3. Remember what I just said earlier when we were talking about this right here? How you get 5 waves up, so that's a 1, and you get a pull back for a 2, and your wave 3, your participation wave, is the breakout. Same idea here, except it would just be the horizontal breakout. So wave 1 up, 3 waves on the pullback, give you wave 2, and then wave 3 is the breakout through that yearly pivot there. Okay. Let me see here. Can I take a look at LMND? Yes. Whoops. LMND. Let me see here. So we had a nice range going on here. Let's see where the low is. Um, 1029, 1027. Okay, try that. You know what? I think I'll probably just draw the range like this. So you got your selling climax, automatic rally, secondary test, your bump up in phase B, your slight spring, and then watch how price just kind of adheres to the side here. And you get your breakout toward that swing high, your pullback, which we usually get, and then boom, there's your jump across the creek. Large candle spreads, large volume, breaking out above that supply there. So back, jump across the creek, back up to the edge of the creek. Here we go up again. We're kind of coming. I mean, again, why are we kind of running into resistance here? Well, look left. That's a pretty significant area. So yeah, this is the weekly. What's the monthly that we had? The monthly's pretty close there as well. Let me see here. If I'm looking at that, we're going to get a 1, probably a flat for a 2 here. So maybe like a 1 and a 2 here. And then, let me put in the 2 week. Let me get the middle between them here. Except, get back on the right time frame there. Yeah, I was just trying to see if maybe there was some closer thing here, but it looks like yeah, it looks like that would be 3 there. You got large candles, you got large volume. Should be 1.618 or higher. Definitely is. So that would give us a 4 then. I think we might be seeing an ending diagonal here. So I can see it probably pulling back a little bit and then pushing up one more higher. Maybe, you know, just up here a little bit to a 111 maybe. You know, could even be 105 to 111 maybe, 115. I think we're probably pretty close to it topping out though. Yeah, if it's not topped out, I think we're getting pretty close to it. I wouldn't be a fan of buying something like this because it's had this entire run and we're just coming toward the top of it, this swing high. So I wouldn't be happy buying it there, even if it just, you know, popped up here, because, you know, there's kind of a possibility, but kind of zoom in here a little bit. See, what I'm looking at here is something maybe like this. 1, 2, 1, 2, 3, 4, 5. And gets us a 5 here. I mean, we've already done the 1618 here. So yeah, I mean, you know, again, 1, 2, maybe 3, 4, maybe a 5 a little bit higher up. But I think we're probably closer to it being done than not. I could be wrong, but, you know, we could see this overextend higher. But right now, I'm not interested in chasing things that have already made big candles along the way. You know, already kind of flowing through it. So yeah. RIO stock. Y'all surprising me. A lot of stock requests here. Why y'all keep getting me to talk about these stocks that are already way off? You should have been in down here, folks. Don't be chasing big green candles. All right? Don't be chasing big green candles. Let me see here. Yeah, so it looks like ABC. We got the breakout here. Ultimately, we should be printing higher. But I don't think that it happens, you know, right this moment. See if we can get this. Oh, this is killing me. Oh, now the chart's going to move. Yep. Yeah, see, we broke. So, you know, we've got an ABC here heading up. So this is 1, 2. Let's see where we're at. This is all 3. Volume expansion, larger candles. It's wave 3. Um, 1618 is up here at 99.72. So I think locally here, say that there we go. I think we're finishing up wave 3 off this low. Wave 4 will pull back just around kind of that resistance there, and then 5's up there. So wave 3 minimum expected target 99.72. So maybe another $10 run higher. And then, you know, the pullback down to about 81.5. And yeah, it can come in a little bit lower. The first target's 81.42. Secondary target is 50% pullback at $75. But then the minimum pattern target for wave 5 will be up here around $111. I think it's probably looking pretty good there. Let me see here. Mara. Let me been a while since I looked at this chart. 214. Oh, okay. Let me kind of get rid of everything. Start clean here. So daily, I like that the monthly pivot is holding its support for now. That's a good thing. Let's back to the weekly. Weekly had a bit of bullish kind of divergence showing up here. Higher lows of the oscillator, lower lows in price. Let's see here. 1, 2, 3, 4, 5. ABC. ABC. Yeah, I mean, I think there's a good chance that low may be in or pretty close to it. Something you're probably looking something like this. Confirmation of this count. Would be, like I said, it could potentially go down one more lower there to kind of sweep that low. But here on the weekly, if we can get a weekly candle, impulsive breakout and close above 1379, that should indicate that the low is likely in there. But what we need is we need a breakout, excuse me, above wave X to kind of confirm it. This wave 2 here. Kind of turn these over a little bit here. So yeah, need that breakout right up here, wave X, 3028. And then that should have us looking, this is a 1-2, would have us looking at expected 3 at about 57.5 and 5 up around $69. Minimum expected, again, that they can go larger, right? They can go larger than minimum expected, but it gives you a place to start when you're trading, right? But that would give you 5 waves up right around the swing high, and that's usually what we look for and when it comes to Elliott wave. So you get 5 up there, and you get your pullback, probably be right around this $30 area, 50% pullback. Yeah. So 36.59 would be the 50% pullback area. So yeah, so you get kind of this 5 up there, get you a 1, then you get your 2 on that pullback, and then boom, you get your 3, which is part of this larger 1, 2, 3 heading up. Now, none of this means this happening, like especially with this, where we're looking at the weekly, it doesn't mean it happens this cycle. But it means if you're trading this, this is what you're following with, right? Excuse me. Lunar, Andre Oliveira. I can't even say it. I'm sorry. I didn't mean to screw up your name there. I'm going to not say names now. But anyway, LUNR. It's a stock, right? Yeah. Okay. Just making sure. Okay. Let me see what we got here. Looks like it wants to break out. My first thought when I look at this, based on just the slightly higher highs, it looks like I want to get it. To me, it looks like, and I'm not saying it's for sure here at the moment, but just my immediate thought is 1, 2, 3, 4, 5, like a leading diagonal. Yeah, I think so. Let's see here, 1, 2, 3, 4, 5, A, B, C. So this is probably a 1 with a flat as a 2 here. So let's see where this is maybe going. Now, just based on the height of the wave 4 pullback here, look for a target up here at 36.41. Now, based on this interior count, yeah, we're right around the wave 3 area. Wave 4 would pull back to the pivot. Wave 5 would get you up here. Let me see real quick. Yeah. Okay. So what I think I think wave 3 is probably done or very much near so. I would look for wave 4 pullback toward this yearly pivot at 15.75. Wave 5 probably trying to target as close as it can up here to the to this $25.50 area. And I think that'll give you 5. And then I think what you end up having then be like a 1 and a 2 for heads up higher. And let me see here. So, I mean, that gets us less than the target area there, but, you know, basically. Now, obviously, this can continue to push up here a bit, and you might get that, right? We're just kind of sideways here this week. So there's no confirmation that we're getting that pullback to the pivot yet. But if we do get that pullback there, it's what we'll look at. Otherwise, we'll look for a rejection here at the R1 pivot and then look again, you know, maybe right down here around $17 or so for the wave 4 pullback, and then wave 5, you know, pushing up a bit higher. But ultimately, probably a lot closer to being done than not. Based on this right here. Yeah, look at that. If we can just get to the 5 waves up to the R1 pivot, 50% takes us right below the pivot there. So again, either there or a little bit higher. We should look for wave 2 to pull back down the pivot area. And then, of course, it'll have your larger degree wave 3 there. You know, up here, maybe about 54.5. And again, it's all going to depend on how this plays out here. Does it stop at the R1 pivot for the 5th wave of 1, or, you know, 5 of 1, or does it push up a bit higher? But generally, it should get you at least a wave 3 up here at 54, 53, this larger degree. And then 5 up here, 63.80, which basically puts you at the 5th resistance pivot for the yearly. Very good place to be. Likely target. So I like the way that sets up. And, whoops. Yeah, I would say right there between that like $63 area and this EQ up here around 74 would ultimately be where this larger degree wave 5 would go. But, you know, that would probably take us like the rest of the year to get through all that. But yeah, I would look to see if we can get this rejection here and pull back to the 15.75 area. Or if it breaks out higher, looking to get rejected around 25 and then pull back down toward there. Break out a bit higher to complete your 5 of 1. And then your 2 pulls back against there. Okay. Let's see here. Let me see here. CRV USDT. Let me pull that up. Or USD, I guess, right? All right, let's zoom all these out here. Where is my CRV here? Where is it? Do I not have it here? I thought for sure I did. Oh, here we go. I knew I had it in there somewhere. Let me see here. Okay, so we're continuing to find support at these previous resistance levels. Going through here. I want to see an impulsive breakout and close on this daily candle above this kind of area here. Above kind of the 38 area, 38 cent area. If we can get that, easy target would be this, almost 42 cents. But, that puts you then in a position to take out the swing high up here. Let me see here. Yeah, I think this looks like an ABC. So I think if this is going to be positive, off the low here, I think this is what we're looking at. And you get like maybe a 1, 2, 3, 4, 5 here to finish out this flat correction. Again, flat correction, right? Actually, let me just do this. And if we can get that then, but again, you really need a breakout above wave B. So this would be wave B up here. So to add confidence to the idea of what I have as a count here, 1 with a flat as a 2, you got to get out above 0.4580. Until then, it could still turn down and head down. But this would give us minimum expected wave 3 target. Up here around 52.5 cents. And wave 5 up here at 56, basically 56.5 cents. A little bit more than that. What I like is the wave 4 pullback right above the wave B resistance. Often that's what we'll get. We'll get a pullback into that resistance. And then, move up higher. Wave 5 gets us right into the high volume node, right up here at this resistance. I like that because if I'm targeting here just off price action, I'm actually looking at, I think, a pretty similar target. I'm looking at this right here. Almost exactly. See where these candles are splitting right here? And then you just have wicks and wicks and wicks above it. And this one went up but immediately back down under. So that would be where I'd be targeting anyway. And that's almost exactly at that target area. So I like it. But we need to have it come up. If we do break down, obviously we're going to, initial target's going to be that monthly S1 pivot there at about 31.5 cents to see about that. So we'll see. If we can get a weekly close, impulsive breakout and close above the yearly pivot here at 0.618, that would be a lot in the way of, hey, we're breaking out higher probably there. So that's an ugly candle the previous week there, that reversal. But it didn't come on any excessive volume. So, it looks ugly, but there isn't a ton of volume coming in on that, a spike of volume. So it's just kind of like par for the course as far as what was going on there. Unlike you have this one up here with this big spike of volume, right? Much different kind of approach there. So this may have just cleared the way right here to give that rally up. We'll see what happens. But yeah, we definitely want to see that, that weekly candle or that daily candle impulsive breakout and close above the monthly pivot here at 0.374. It's the first thing. Let me see here. Aloha. Mr. Lamb, always good to see you, buddy. Hope life's treating you well. CHKP, is that a crypto or a stock? If you guys aren't putting like USD or USDT behind it, for most of these cryptos, I'm not going to know because I don't mess with the nonsense with the low stuff, and there's just millions of them out there, so I often don't know them. CHKP. Let me see here. Is it checkpoint software that you're looking for? I guess I'll pull that one up then, since that seems to be a good likelihood. I'm so used to y'all asking for tons of crypto, which is why I always assume it's going to be crypto. But here y'all are, proving me different, proving me otherwise. Did y'all give up on alts completely? Oh, I like this. Who are you? Consistency spike. I like what the weekly looks like at the moment here. First thing I noticed is, excuse me, so we got this range here. Whoops. And we've got that potentially what I would see as a spring there. So let me see here. This looks like 3 down, possibly 3 up. 1, 2, 3, 4. Yeah, it looks like ABC. Let me see here. ABC 1, 2, ABC 3, 4, WX, Y maybe even, or ABC here for 5. So I like what I'm seeing at the moment. Let's see here. I really like that. We're coming right up into this large low volume node here. So the odds are that we would find support around this area. What's going on with the daily here? Yeah, see? Just ABC, ABC. Getting rejected right here where we have these overlapping wicks. But if you can pop up through that, I think that really sets up the move. Stochastic RSI reset and oversold, crossing bullishly, trying to break out. RSI giving us from back here. We've got bullish divergence from back here. You got lower lows in price, higher lows in the oscillator. That's bullish divergence from back here at this swing low, which we had bullish divergence leading into that. Boom, gave the pop-up in. Now from there to where we're at, we again have bullish divergence, potentially printing a spring here. A lot of volume kind of overall coming in this area. Yeah, I would watch for this. I think it looks pretty good. Let me see. Yeah, see, that looks like a 1 and then an A, a B, and a C as a 2 here. So here's what I'll say. Dropping below 169.02 is going to invalidate my count. But this is what it's looking like to me at the moment. Turn these stupid things off. One, 2, 3, 4, 5 here. Now, what does that mean? Again, in Elliott wave, in order to confirm this count, we actually need to break out above wave B way up here. It doesn't mean you can't trade it. It just means you have to understand where you're at. So if you're looking at it, you go, you know what? I think you're probably right on that. I think that's looking good. Then all you would do is you would take your entry, put your stop loss immediately below. Stop giving it a big room. There's no reason to give it a big room. Use proper risk management. And if you're set on that there, and that's all set up, right? Three waves up minimally around 278 and 62 or so. 5 waves up minimally around 303. And so that would give you a potential, if you ride it all the way through, of just over 17.5 R. So basically, again, making $17.5 for every dollar you risked. So if it hits your stop loss and you're going to be out $1,000, then if instead it goes to the target, you're going to make $17,000. 17,580. Let me see here. Best way to learn to read and analyze charts from you? Well, obviously, TWC. Again, we have a huge course vault, but what's more important than that is you have to do those things. You can get the basics and understand what we're talking about. But then 3 days a week, we do live trainings. We do Wyckoff on Mondays, price action on Wednesdays, Elliott Wave on Thursdays. But it's not about learning them separately. It's about learning them so you understand how they work together. And that helps you understand how liquidity forms on the charts. Like I said, price action on Wednesday, yeah. And then we do live trading, short-term scalping and day trading there on Monday, Tuesday, and Thursday mornings. So, yeah, that would be absolutely the best way to do it, because I do incorporate these things together, right? Because, again, it helps you understand where the liquidity is. But it's not enough just to see. A lot of people will teach you guys how to do a thing, right? And they'll say, well, here's mechanically how you do it. But they don't really give you any understanding of how it's done. And that's what I try to do. Like, even, I don't know if you notice when I talk here and I go into explaining and whatnot, it's so that you can understand, right? I'm not just like simply, if it goes here, then that's great, that's whatever. No, I want you to understand why. So that's what we do a lot of in there. And of course, the mental side of it, the emotional side of it, the psychological side of it. We're at members.texaswestcapital.com is where you can join in there. And like I said, right now, if you use 55 off, 550FF as the discount code for the Liquidity Cartography Group monthly subscription, you get 55% off. So absolute best deal you're going to find. And it's almost gone on that. So, but if you want to know, if it's worth it and whatnot, or if I'm just blowing smoke, or if I'm just trying to get you in to get your money, we do have people here, I notice, in the audience that are members. We got Andrew Colton. We got Praga on there, Michael Lamb, Steiger's in there. So yeah, they'll tell you what's up. Anyway, do we have any other charts here, chart requests here? Let me see. Andrew, have a great day, man. Interested in my thoughts on Solana. Let's see here. Let's look at my big chart here. This is such a pretty chart. Just the movements. There's such strong movements here. Really great. And then we just kind of been sideways here for a while. Since basically March of 24. So we're coming up on 2 years. Let's see here. Locally, looks like we could be a 1, 2, 3, 4, 5, and then A, B, C is a flat maybe. 1, 2, 3, 4, 5 here. even though we're getting the dips below the monthly pivot there, 128.27, it's holding, right? Unfortunately, with that count, again, we need to get above the wave B, which would be this swing high up here to kind of, add confidence to the count there at 148.74. As long as that monthly pivot's holding a support, my bias would be to the upside. Breaking above the, 148.74 should indicate that, yeah, that's low's probably in there. If we were to break down, however, I would be cautious, as we could probably be coming down here to 109.63. And so that would be kind of my local look at this. If, in fact, this is a 1 and a 2 like this, is expanded flat, 3 waves up gets you 167. 5 wave up gets you about 177 minimally. And so as you can see, that 177 is right here at this support level. Mid-range, kind of midway here in this low volume node. So again, makes a lot of sense. Comes up near the swing high here. Now this could overextend as well, of course, right? For right now, I'm looking at this as a leading diagonal here. So 1, 2, 3, 4, 5. And then like some sort of maybe WXY down here. But really, again, kind of like Bitcoin, we're just sideways since November. So there's nothing really smart that I can say about this that you guys would think is really smart. Basically we're range bound. So basic range bound trading says you could potentially just buy bounces around resistance and sell rejections around, or buy bounces around support and sell, rejections around resistance. But really, we are just sideways right now, guys. So there's not a whole lot that we can really talk about until we get some movement out of that sideways. But I've told you, what I'm looking at maybe here. We'll see. We'll see if it works out. But the one thing you want to be careful with is retail traders, especially if you're newer, is that you get in there and you get bored, or you get scared that you're going to miss out. Neither one of those reasons are ever a reason for actually getting into a trade. Matter of fact, those two reasons are reasons not to get into a trade. Again, it's completely opposite of the way that you generally tend to think as a trader, right? When you first come in as a market participant. Which again is why, at TWC, we focus on structure, right? We focus on proper risk management. We focus on giving you an understanding behind why liquidity is forming where it is and how to exploit that. We're trying to give you that structure that you need so that you're not entering because you're bored, so that you're not entering because you're scared you might miss out. Because those are where you usually lose your money, and big time, right? And it's all because that psychology that's going on, your emotions and whatnot. Let me see here. I might have one more to do. Let me see. Man, oh man, let me see here. Somebody had one here. FET. Somebody was asking about FET. FET. Nope. It's up here somewhere. Up here at the top. There it is. So this is what I'm kind of looking at on FET here. But again, you got to, we got to hold the low here, and we got to break out above 0.3137. And then that'll give us, new expected 41.5 cent target, and then 46.2, which basically means what? It means running from the monthly pivot to the top of the range up here. So we actually have supply sitting up here. right here in this blue range. There we go. Let me see. Let me do this. Yeah, initial target along the way, if you want to look, is right here at 0.3776, then 0.4153, then 0.4623. Those would be the targets I'd be looking at. If the low holds here and we break out there above 0.3137. Now, does that mean you can't, that you shouldn't get in? No, it doesn't mean you can't do that, right? You can definitely get in here. But if you're going to get in here, you have to do it right, and you have to use proper risk management, and don't be setting up these stupid large stop losses. Just put your stop loss right below swing low here, because guess what? If we break down below here, then my count is invalidated, right? So just doing this to the pattern target up there would get you a 5.5R toward the potential wave 3 target, get you about a 7R, and up there to the wave 5 target up there, 8.82R. Okay? So, again, I know that maybe not what you want to hear, right? But it is the way it is, right? It is that way that it is. And I think it's probably one of the hardest things, most difficult things for retail market participants, especially the newer they are, is to get into, is this idea of, well, I want to open the chart right now and enter somewhere. Well, okay, you can enter, but here's the criteria. You need to have rules when you're trading, folks. And you got to tick off all the rules. If you have 5 rules and only 4 of them are ticked off and the 5th rule isn't ticked off and you're entering anyway, you're not going by your system. And I see a lot of traders do that. And they end up losing a lot of money because of it. Because they get impatient, because they're worried about missing out. Those are the big things that get you guys to jump in when you shouldn't be jumping in, right? You need to understand these ideas of confirmation levels and invalidation levels, because those will help you stay more centered. Those will help you stay more, okay, well, I can't get in until then, but there's a reason why, right? Again, it's not all mechanical. It's not like, oh, you just can't go because of that. It's like, here's why. Here's what it means. XLM. I think I've got an XLM chart here. Same idea. So yeah, XLM's kind of taking a little bit up here, moving good. I like that. Possibly a 1 and a 2 here. Two. We had nice looking tweezer bottoms here. We took off. But again, A, B, C, or W, X, Y, it's 3 waves down. So we got to break out above that 0.24693 to add confidence to this count. But if we do that, then I got it pretty close there. Then we're looking up here around 0.29859 as wave 3 minimum expected, and then wave 5 minimum expected up here at around 0.320477. And where does this get to? I mean, geez whiz, it gets right here. See, if I was to pick a price action target up in this area, I would pick this right here, just slightly above where that target is. So that area, right? Because it's never, remember guys, your targets, your stop losses need to be precise, but your targets should be ranges, should be, like a lot of people, they're going to wait till the exact price hits. I'm not a fan of doing that. I'll usually get out slightly before my target, because I may have hit it just on, perfectly, but there may be other orders ahead of me that get in and I can't get filled there. Right? Or just below it. It'll stop just below it. Right? So, yeah, we're looking at this, but if instead we break down here, if we don't get just a sweep of this low, then we'd look for a target down here at 0.178. And that's just how you would approach it. Makes it easy, right? Makes it simple. You know what you're looking for. I saw somebody said vet real quick, and then I think I'm going to have to go. Yeah, we're after 12:30. I got to go. Let me see here. Vet. So vet, let me see. Let's see how large this is in comparison. You're hitting it there. Honestly, this looks like a 1 and then a flat here. So this might be a 1 with a flat as an A, and then you get your 3 waves up for your B, and then you work on your C here, which may or may not be done, but we're pretty close to the swing low. So if we break down further, I would look for 2 things, either just a sweep of the low and a close back up in it, or a move down a little bit further here to 0.009 area here at the S1 pivot. But if we can hold this low we're at, and we get a daily candle impulsive breakout and close above 0.011 here, that should indicate the low's probably in. You know, you can look for a breakout above 0.01256 to really kind of indicate you're heading up higher. I've got a target. If we can do this, I've got a target up here at 0.01739. So that's kind of where I have my vet target. If we can hold this low here and you know, break out there. If we lose the low, though, again, we'll look for either just a sweep back up or a move all the way down to the S1 pivot, the monthly S1 pivot here on the daily time frame, and a move up on that. All right? Anyway, listen, I appreciate you guys joining in as always and giving me charts to look at. We'd love to have you with us at TWC. Join that Liquidity Cartography group. Again, you can get it done really inexpensively, 55% off with that 550FF code on the monthly for the Liquidity Cartography group. But that gets you everything I do plus everything Fibbo does as well. And in there. So a lot of stuff to go through, lots of training, lots of trading live with me. Done pretty good this week, guys. Let me see here. I think today, let me see here. What did I get? Today I managed to lock in, even though I was doing all this work, I managed to lock in $302.50 today so far. And then we had almost 500 yesterday. Again, Wednesday was a really busy day. Only had like 270. Had almost 500 on Tuesday. So I trade live with our group here. And a lot of great people you'll meet in there. And they're all raking in their money too. So they don't necessarily take the same trades I take. But they always tend to end up making money in there. So most of the time anyway, as it should be, right? Listen, as always, remember the only thing you control is how much you lose. So please keep working on that risk management. Meet us over at members.texaswestcapital.com. Use that code. Get it while you can. It's about to be gone. And I'm not warning before I take it off. I'm just taking it off. And other than that, man, y'all have a great weekend. Trade safe. If you're in the way of all this Arctic stuff happening this weekend, please be careful. I know I'm about to run out to the store to get grocery shopping done before the weekend because we're just going to be awful down here around Houston. So with the expected ice and everything, I don't want to be out in that nonsense and 20-degree weather. Screw that. Life's too short. I know some of y'all are in the areas where it's like that quite a bit. I know. Sat, you stacked up on tequila? I can't tell everybody else to do the same, but Sats is here in Texas, so you can do as Texans do, right? Appreciate y'all. Have a great weekend. Trade safe. And we'll see y'all back online, all right? Take care, everybody.
Trading tip. Always manage risk before chasing gains.